What's up? We're back. Another episode of Go Fund Yourself, and today is Degen News Day, and we have our favorite Degen joining us today. Christine, how you doing?
I'm good. I'd like to be your favorite Degen. I feel like I'm a Degen 24 hours a day.
You're like the most Degen of all the Degens. For people that don't watch every day, considering you're on relatively frequently, maybe you could talk a little bit about Kinetic. Kind of what are you building? What's exciting about Kinetic and why people check it out?
Yeah. We just released a new. So if you want to know something cool, Kinetic is a lending market we're building in Flare. It is awesome. If you don't know anything about Flare, check it out. They have F assets coming out. They have Layer Cake coming out. Better way to do things, more decentralized, more safe. Anyways, our lending market is super cool because we just partnered with Scepter, which is actually an RVL product, which is awesome because we together, this guy and I, wherever he is this guy and I, we're working. I'm bringing liquid staking into the Flare network, liquid delegating, if you will. So that's really exciting. You can check us out on Twitter or at our site at kinetic.market. Awesome stuff. Lots going on.
Really Twitter, what's the handle on Twitter? At
Kinetic Markets.
Kinetic Markets. There you go. Awesome. All right.
Well, it's actually Kinetic_markets on Twitter.
Okay, perfect.
Mm-hmm.
So today we're talking a little Degen. There's not a whole lot of like meme coin, shitcoin news today for some reason.
I don't know how that's true because all I work there's so many memes happening.
It's totally meme season. Like I'm surprised we didn't come up with any like meaningful narratives around that. But nonetheless, talk a little bit about the market turmoil, the pre-halving market turmoil, and what that means and what people are thinking. Talk a little bit about PancakeSwap and their new DEX or AMM concept, CL. I don't know. Anyways, we'll talk about that. Talking about Cosmos, one of their new upgrades and what that means for cross-chain connectivity. Talk about a tokenized diamond fund on Avalanche. And then lastly, we're going to talk about Ethereum slapping the hands of bad validators, which is super exciting. All right. Let's go. Let's do it. All right. We are back. All right. First topic here is the pre-halving market turmoil. So what the articles suggest is that the cryptocurrency market experienced significant volatility with Bitcoin's price dropping below 69,000, as altcoins also faced steep declines. This market behavior occurred amidst anticipation of the upcoming Consumer Price Index report affecting U.S. interest rate expectations. Despite a late-day rally in the stock market, the crypto sector yesterday struggled, with Bitcoin and altcoins experiencing notable losses. Analysts suggest caution, especially for those with leveraged positions as the market navigates through these uncertain times. We talked last week, Christine, if you were watching, about just the liquidations and the dollar value of liquidations that happened during peak Bitcoin volatility. And we suggested at that time to be careful. There's a lot of leverage in the system right now. We're way over leveraged probably. And there's a lot of people taking fairly significant directional bets. And often when that happens, the opposite becomes reality. Anyways, what are your thoughts? Are you concerned about the recent kind of blip in the charts, or what does this tell you?
I talked about this with Ciara the other day. I don't think I'm ever concerned during this period. It is a period that we know to be true. So if you are day trading, obviously pay attention. If you're just holding, you should be fine.
If anything, it might give you some good opportunities to buy, right?
100%. And this is it's expected. It's part of the cycle. We know that it's happening. So, I mean, if you're just coming in and you bought last week, 4 days ago, and you're like, oh my God, don't sell now, not financial advice, but that's about it. Like, I don't think it should be FUD worthy at all. It's just part of what we know to be true. And like yes, proceed with caution, but it's exciting times for some people because this is where those opportunities are made, right?
Absolutely. I mean, what the conclusion to this should be for most people, at least what it is for me, is, I mean, dollar cost average is still your best strategy when you're buying and when you're selling, because things happen and you can't predict them. There's no point. So for the people that put all of their money in Bitcoin last week because the halving's coming and thinking that it's just going to go up only, you might have had a bit of a surprise. So again, this is an argument and evidence that validates that argument. DCA is always the best way. Buy on some regular schedule. You'll take advantage of peaks. You'll take advantage of troughs. And in the end, your average person will be a lot better.
I'm gonna make you a shirt that says like not a degen, and then on the back it'll be like DCA is the way.
Maybe that'll be the next Go FUD Yourself merch. But, I mean, again, word of caution to everybody leading into the halving. We still have a little ways to go. I mean, it's still almost 10 days. Yeah. So not quite 10 days. Yeah, somewhere around almost exactly 10 days. And a lot can happen in 10 days. And again, we also have to pay attention. Interest rates, what is the Fed going to do with interest rates? Consumer price index and the inflation numbers are expected to be, yet again, not very attractive. So yeah, there's some headwinds for sure, at least in the short term. But I think it's going to be volatile for the next little bit. And no one can predict if it's going to go up or down. So be careful. That's all we can say. All right. Moving from Bitcoin, what do we got to say about pancakes?
Bitcoin. Okay. PancakeSwap leads advocates for enhanced capital efficiency in DeFi for DEX growth. Okay. PancakeSwap's product manager, how do you say this?
Chef Momo.
Chef Momo emphasizes the need for increased capital efficiency and composability in DeFi to boost the market share of decentralized exchanges by introducing concentrated liquidity automated market maker COM. What?
It is clam. I couldn't remember if there was an L in there, but
yeah. Options trading on Arbitrum. PancakeSwap merges with Strike's options trading protocol to tackle the liquidity scarcity in options trading. This initiative aims to strengthen on-chain options liquidity and provide more sophisticated trading options and opportunities for liquidity providers.
Okay, it's pretty exciting. I think it's PancakeSwap has been obviously an industry leader or up there in terms of their presence on BNB chain, and they've expanded to a few others. In this case, Arbitrum. I mean, this kind of follows the same logic that Uniswap has been going through over the last little while. Is how can we continue to increase the efficiency of capital used in the AMM? Because the original, let's forget Uniswap v1, but even Uniswap v2, impermanent loss was pretty incredible. You needed a heck of a lot more liquidity to manage market movements, to absorb market movements up and down comfortably. And so they were saying, okay, if we want to encourage more people to add liquidity to these exchanges, we have to make it so that it's less likely that they're going to end up losing money in the end. So concentrated liquidity was kind of the next logical step. Uniswap v3 is Uniswap's version. This to me sounds like PancakeSwap, as opposed to just simply forking Uniswap, is coming up with a new concept, Clam. And
pancakes and clams.
I don't think it's a massive deviation from what we're already seeing, but it is meaningful innovation from a group that doesn't want to just fork Uniswap, wants to pave their own path, which is kind of cool. So
I love it because it keeps actual competition within the space. It makes it. I love when these, when you find these better ways to do things. You're right. It's really easy to just fork and move on because it becomes a new expectation. But when they put in the time to figure out what can we do differently, it makes a difference.
Another thing that I find interesting here, and I don't have enough information on this to talk meaningfully about it, but liquidity and counterparties for options has been a huge challenge in the space for getting options on chain. And so I'm interested to see how this new version lends itself more comfortably to the options protocols for their liquidity. Pretty interested to see how that actually plays out.
I love it. The market's getting smarter every day.
Yeah. Well, I mean, and it's only a matter of time. Like I'm aware of, and probably only a very small subset, but I'm aware of probably pushing 10 new exchange concepts, entirely new, novel exchange concepts. So I think the market's going to, see some more innovation on swapping indexes. And if these guys want to stay relevant, Uniswap, they've already hinted at Uniswap v4. PancakeSwap now hinting at their clam. So, I mean, yeah, everybody's trying to position during this market. There's a lot of pretty interesting concepts coming to market this bull. So these guys have to shore up their market share. So I think it's a good move, smart move. It's good to see innovation coming out of a project that most people thought was just owned by Binance and a cash cow. So I'm a big fan. Okay, moving on from exchanges and BNB and Arbitrum, Cosmos. Cosmos Stargate upgrade paves the way for cross-chain connectivity. Cosmos's Stargate upgrade featuring the inter-blockchain communication protocol revolutionizes token and data transfers across Cosmos-based blockchains. Launched last Thursday, this upgrade marks a significant milestone towards Cosmos's vision of a network of interconnected blockchains. Now over 6 billion in value, including 2.8 billion from the Terra blockchain, can seamlessly move across chains, developed with the Cosmos SDK, facilitating unprecedented interoperability within the Cosmos ecosystem. IBC, we've been hearing about this for years. It was the whole thing Cosmos was initially started for, essentially. Are you excited? Is this upgrade get you worked up?
Well, there's a lot that's happening in Cosmos. I have been a participant over there for a while, and their whole thesis is like the internet of blockchain, right? They just want to connect everything and make it move. But yes, this is interesting because they've made so many advancements in connecting to other ecosystems also, and they're kind of like in the background. Everybody's using these IBC connections, and everything's just kind of like slowly getting intertwined. And I think you're going to see a pretty big movement of the tech, like IBC, the inter-blockchain communication thing. I think you're going to see that a lot more. I mean, it is kind of becoming a standard for a lot of different reasons. And so, yeah, I think this is definitely something to watch out for. We don't maybe talk about it because if you're not in Cosmos, it feels like its own daytime drama. They have so much going on and so many personalities, but what they're building, the tech everything is built on, is going to matter. So
yeah,
whether you're using it there or somewhere else and you just don't realize it, it's something to pay attention to.
What's really interesting about IBC is there's many different programming languages on Cosmos. And so one of their biggest obstacles was being able to connect different programming languages in blockchains together and still allow for this seamless communication, data, and asset transfer. So I think it's pretty interesting. Obviously, they've had to overcome a lot of hurdles and obstacles to try to figure out how to facilitate this. I guess the only thing that makes me pause here a little bit is there's a lot of other groups that are all fighting for this same kind of inter-blockchain connectivity space. So like CCIP, Layer 0 has a cross-blockchain infrastructure. I think the native version on Cosmos is interesting because it is, in fact, native to Cosmos, which obviously is pretty cool and unique and doesn't have to connect to literally every blockchain, but we'll have to see. Definitely a big step, something that anybody that's paying attention to Cosmos has been waiting for. Hopefully Christine didn't freeze. Oh, your eyes were closed. Looked like you felt.
I might have just for a second.
Yeah, so I think all in all, I mean, it's a good upgrade. It'll be interesting. Most of Cosmos has been kind of stagnant so far. We haven't heard much out of Cosmos.
Yeah, I think that's just because you're not listening. There's so much happening.
I'm listening. I'm there. There's a lot going on, obviously, but it's just unless you're in
that's what I'm saying. It's like this little closed community and because of how much is being developed, it's like a whole different thing. Everybody's working in their own little ecosystems within this web, and it makes for a really interesting, like, development happens so fast because of what you're able to do.
Yeah.
So you really got to stay on top of it.
I think, I've been saying this for a while, so I'm a bit of a stuck record on it, but I think this is one of the biggest hurdles that we're going to overcome or have to overcome imminently is we continue to see proliferation of L1s and L2s and all of these Cosmos zones and supernets, or whatever the hell Polygon calls them, Avalanche subnets. There's everything, right? There's Polkadot, parachains, like everybody's got their own kind of weird thing. But what's happening is it's fragmenting liquidity, and it's creating even more complexity to what arguably is one of the most challenging user experience obstacles of any new technology. There's a lot you have to learn to get into crypto, and bridging and all of the risks and so on associated with that is a big problem, in my opinion, especially for mass adoption. So I think this is going to be an area to pay attention to. Is the Cosmos SDK the one that wins? I don't know. CCIP win? I don't know. But it'll be interesting. I think it's going to be at the forefront this cycle, because fragmented liquidity is just going to continue to increase. There's more L2s every week, it seems like, and new L1s coming out. I mean, Monad just came out with a big fundraise recently, like at like 3 billion valuation or something. Like all of these L1s are just going bananas. But the problem is there's only so much liquidity to go around. So we'll have to see. We'll have to see if we solve this problem or if it just creates more. Okay. Want to talk a little bit about the Diamond Fund?
Yeah, I can do that. Tokenized Diamond Fund launches on Avalanche Network, aiming to democratize access to 1.2 trillion market. A new tokenized fund on the Avalanche Network, backed by the Diamond Standard Fund, is listed on Oasis Pro Markets. Now offers investors, including pension funds and endowments, the opportunity to invest in diamonds. This initiative by Diamond Standard Commodities and Horizon Kinetics makes 1.2 trillion diamond market accessible and tradable, leveraging blockchain for transparency and efficiency. The fund, benchmarked to the Bloomberg Diamond Standard Index, adopts the ERC 3643 token standard for secure and regulated trading. This is exciting. This should be exciting for you.
Yeah. Something that we maybe could even talk about in Crypto Arms Race a little bit. Two things that are important to note from this article, in my opinion. Oasis Pro is obviously making some moves and starting to get mainstream traction, which is really cool, because many people were wondering when and how the breakout for Oasis Pro was going to be. Well, here's a pretty good validation that it works. They have the appropriate infrastructure, and obviously there's third parties willing to partner with them. So that's exciting. Secondly, Avalanche, yet again, another real world asset project launching on Avalanche. Everybody poo-poos on Avalanche. But
you're just going to take all the key players, though, and put them in their back pockets.
A very, very significant proportion of the institutional enterprise players from outside the space coming in, their first stop is Avalanche.
You know what I noticed a lot, too, is there's so much talk about RWAs right now in all these ecosystems, and we're trying to make...
Like library books, you mean?
Yeah, so that's exactly it. So they're trying to, make real world assets out of things that aren't, to prove a tech. But what Avalanche is doing is actually bringing them, which is pretty amazing.
So this is super cool. Obviously, like trading diamonds is something that's out of the reach of most people, obviously. How do you know if you're getting the right quality of diamonds? Are you a gemologist? Do you have a gemologist on your team? Yada, yada, blah, blah, blah. So what happens is there's a whole bunch of diamond brokers. So you can go to these brokers if they're trusted. You can buy raw diamonds, and then you have to deal with shipping and storage and security and all this other nonsense. Or you can buy representative shares in diamonds, which is effectively a derivative. You have a piece of paper that says you own the value of a couple of diamonds, but there's no actual diamonds collateralizing that piece of paper. There might be 5 other people that also own those same 5 diamonds. You don't know. So what this does is it allows a vibrant trading market for something that, without the transparency of blockchain, is very difficult from a trust perspective. So this is really interesting. I think it's kind of similar in a lot of ways to Forex and how people move in and out of Forex as out of different currencies and so on to manage risk. This is another way that people can do that. What's cool here is that if you were to do this even in TradFi, if you were to hold some diamonds as an example, or if you were to hold the paper that represents diamonds, how do you do anything else with those assets? If there's no meaningful and immediate claim to the underlying diamonds, I would never take a piece of paper as collateral, obviously, because so they default on their loan, but I can't claim any meaningful value back. So this allows, again, composability and all of these exciting things that blockchain allows and enables. This really adds some fire to that, or some fuel to that fire, I think. So definitely exciting. I'm a big fan, obviously. And it's nice to see actual RWAs coming on chain.
Yeah.
Okay. Okay. We're going to end the day off today with a little bit of hand slapping from Ethereum. So Ethereum proposes validator penalties to enhance network decentralization. Vitalik Buterin has put forward a proposal to penalize correlated validation failures, aiming to decentralize the blockchain and encourage participation from smaller validators. The proposal, backed by analysis from Ethereum Foundation analyst Tony Warstatter, targets economies of scale that contribute to centralization. By imposing penalties for failures among validators under the same control, the plan seeks to deter large entities from dominating the network, thereby promoting a more distributed and secure ecosystem.
Love this.
Yeah. Did you see this as a problem before we read this article, or?
No, because we're not paying attention to that, but I'm glad they are. I got too much going on. No, but these are the things that you don't know. This is what you expect your founders and your team leads, no matter how small or big your project is. This is their job, is to be. DAOs sound great. All these things, validation sounds great. It is great, but there has to be some sort of collective eyes watching these things and knowing when it starts working against you, because it can get out of hand. We talked about this the other day.
It's similar with like the liquid staking dominance, right? I mean, when we first launched liquid staking on Avalanche, there was months and months and months of conversations with Ava Labs and code reviews and security reviews and all of these things, because liquid staking is probably one of the single largest risk vectors to an ecosystem. And so there's been a lot of criticism lately that in Ethereum, because of the way that the liquid staking structure works, it ends up creating these clusters of like super validators, right? You get these validator entities that have a lot of the validation power. And the problem there is that becomes more and more centralized. It becomes more and more single point of failure. And so what they're saying is that if you run, at least my understanding of this, I could be wrong, it's just based on a proposal, but if you run, say, 100 validators, and one of those 100 validators acts improperly, then in theory, the correlated validators can also be penalized. So all of your validators can be penalized. And so what they're trying to do, I think, by this is encourage people to not have massive validation networks, because they could all be at risk of slashing or some sort of penalties if they're not doing what they're supposed to. But the risk is becoming a real problem. I mean, Lido has a significantly outsized share of Ethereum liquid stake value. And for that reason, their validator network and the way that they delegate to validators is a risk vector for Ethereum and something worth thinking about. So I think this is a great move. I mean, it'll be interesting to see how the market responds, because for every move, there's usually a counter move somehow. So it'll be interesting to see if, in fact, the large validator networks find a way around this. How they decouple one validator from another is beyond me. But we'll have to see. We'll have to see how that plays out. I mean, Ethereum's been doing some cool stuff lately. Last couple of years, I was pretty sure that ETH wasn't going to maintain its dominance in the smart contract space, but
it's Degen Day. You were just going to say not going to make it, right?
Not going to make it. Not going to make it.
Gonna make it.
But ETH seems like it's going to make it. So that's a conclusion. The conclusion to Don't Find Yourself Degen Day is ETH is going to make it. But with that in mind, I think quick reminder to everybody, be careful, obviously. Like, there's such an incredible opportunity right now in the market in terms of finding good projects with good momentum, good narratives at attractive-ish prices. But you're not going to miss it if you don't all in today. So just make smart, objective, prudent decisions that you're willing to live with. That would be my recommendation. Don't use leverage right now, even if you are a degen, unless you're very confident in your abilities to to view the market because things happen so fast in these volatile times that it's, even if you're monitoring it, often a move can be so large, so quick that you couldn't have done anything. So be careful. We're a live show Monday to Friday, 12:30 p.m. Eastern. I'm usually here most of the days, but lately we've had some new guests. That's pretty cool. We have a new concept for Fridays coming up pretty soon, which I'm a big fan of, but we're not quite ready to share that yet. So new concept for Fridays. We'll announce that pretty soon. Make sure you like, share, subscribe. Help us get the word out. Again, the purpose of Go FUD Yourself, every day, 30 minutes, crypto news. That way you don't have to read all the articles. We aggregate all of the ones that made the biggest splashes and had the most circulation from the previous day. So that's what we're here for, to help you dispel a little bit of the FOMO and avoid some of the FUD and be objective in approaching the markets. With that, today, Christine, I say to you, thank you very much. Kinetic.market or Kinetic_markets on Twitter. And I say to you, go FUD yourself, my friend.
Have a great day.
Later.